Hi, everyone. My name is Travis Schwab from Eventus, and welcome to the final, not the least, but the final panel here of the Crypto Connection Conference. I'm supposed to be yelling this with all the exclamation marks, but the conference title or the panel title is Trading Up, Market Structure, Products and Platforms. So, what we're trying to do with these luminaries that I'll introduce here momentarily is talk about the crypto market, the crypto trading desk, what the ecosystem looks like, ramifications for surveillance and platforms, and to really give you guys a feel for how to trade this, how to build a business around this. We have people that have done this on this panel, so it's really exciting, and what are the challenges and what's in store going forward. And so excited about diving into these riveting topics with our two luminaries here, Chris and David. Chris Hehmeyer is the founder of Hehmeyer Nortide. David Mercer is the president of LMAX. Welcome. I'll give you guys I'll do a little quick intro here. So, Chris, industry veteran, well-known in the derivative space. His firm Hehmeyer Nortide is a market maker, liquidity provider, and crypto digital assets. Prior to that, Chris has really done everything within the derivative space, including starting multiple trading firms, serving as the head of multiple regulatory agencies and exchanges, including NFA and BOTC. David, another luminary in the business, done everything within the FX space, who runs LMAX Group. So LMAX is a global high-growth financial technology company based in London, leading operator of institutional FX and cryptocurrency exchanges with offices in 11 countries. And like Chris, David really done everything in the FX space and been pushing fintech initiatives really for decades. So we're really privileged to have both of these luminaries in their space. And thanks for taking the time, gentlemen. Welcome, David, Chris.
Hi, Travis.
Nice to have you. Yeah, so let's get into really the business case. So of why moving from traditional over to crypto, Chris. And so I want to start you. I want to help our viewers understand why this move. You had been in the derivative space for decades, and you've decided to move over exclusively to the crypto space. So help understand, what prompted the move and why you did it.
Well, thank you, Travis. Thank you for that kind and thoughtful introduction, and for the attention and everything DCA is doing. And the answer to that, I think, is why we're all tuned in, and that is we're all fascinated by this technology and the implications that it has and what it means. And we started dabbling in it somewhat late to the game in 2017. In fall of 2017. And then we started trading and making markets in 2019. And it was the end of 2019, we decided to get out of all of our traditional futures platform business and the brokerage that we had that was a registered introducing broker, just to focus on crypto and making markets in crypto and managing inventory, trading crypto. And we had an offsite where we spent a weekend talking really about why are we in this? What is it that's drawn each? It was really interesting hearing that the people that have been drawn to it basically gravitated to this expression that we call liberating interactions. And we all basically had been drawn by the fact that these technologies are going to liberate the way people interact with each other. And the ability to own our own assets in a wallet, our own coins, which is still so young and immature and nascent. There's lots of people that are providing good services and holding coins, but the ability to be able to have an asset in your own wallet, your own coin, and send it to somebody on Sunday morning in El Salvador or wherever.
Good choice.
Is ability that has not been possible before. And so the technology enables the ability to interact in ways that have never been possible. And that's a pretty exciting fundamental concept. Now, the products and the derivatives that are coming from it, then, of course, start to create challenging regulatory matters because the structure of the regulatory environment, the scheme, and I don't mean that in the scheming in the corner, but thematic, is structured mostly around the intermediaries. And this is different. And so it creates real real regulatory challenges because of the way the regulatory environment and structure and scheme has been set up. So having said that, the answer to your question is, I find it tremendously exciting to be involved in this technology that's going to change things.
Okay, that's awesome. I appreciate you saying that. We'll definitely jump into the regulatory challenges there. So, David, I want to kind of same question to you as you have built a phenomenal FX trading business, platform business, and you decided to get into cryptos. What was the business case that you put together and decided to push into that space?
Yeah, thanks, Travis. Yeah, it's interesting. I have to keep reminding people I still do foreign exchange, right? So
right, exactly.
You're looking at the brands over my shoulder. I actually do a lot more foreign exchange than I do crypto. So I think it was 2 weeks ago when we had that Mad Wednesday, whatever you want to call it, Wicked Wednesday in the crypto markets. I think we did LMAX Digital did $6.5 billion worth of volume, but the good news is my FX exchanges did 30 billion. So we're still alive and well. And actually, funny enough, back to a couple of things Chris said, if you look within LMAX Group, I have a regulated FCA broker being LMAX Global, regulated FX venues, and a regulated MTF being LMAX Exchange. And then the last exchange we launched was LMAX Digital. And actually, that brokerage exchange mix, along with the fiat on-ramps that you get from brokerage houses, has helped LMAX Digital to launch. So, but to answer your question, why do we get involved? We went in the position like Chris, where we could say, forget all this old capital market stuff. Let's just do this new thing. It actually came from our customers. So, LMAX Group, we have 34 banks, I think, connected right now, and most of the world's largest proprietary trading firms in New York, Chicago, Amsterdam, London, you name it. And actually what happened, as Chris said, back to that timeline, in the sort of last bull run, 2017 up, they started to say to me, David, and I'm sure I wasn't the only one, I'm sure they asked all the other, perhaps bigger blue chip exchange groups, hey, any chance you can put an industrial exchange together where we understand the rules of the game, where we have low latency matching, exchange type rules, and really just institutionalized venue where we can exchange risk with like-minded participants. So we actually looked at it when obviously there was enough know-how within the organization. Like most organizations, everyone was playing in Bitcoin and Ethereum at the time. And we discovered actually that the foundation of this market was there. And the foundation of this new exchange, our fifth exchange, if you like, was exactly the same as the other exchanges we run in London, New York, and Tokyo. So the only little thing we had to do a little bit different was we had to go and integrate with sort of 5 major blockchains. And then there's no great banking or PB system in crypto to this day, I hasten to add. So we had to go off and understand security protocols and build our own world-leading custodian. So that's really how we got here. I'm very glad we did. Not quite late to the party, but I think the way I look at the market is, yes, it's very exciting in its own, but I think it's going to be almost the way we build technology here. There's going to be a continuous feedback loop back into traditional capital markets. They will learn from each other. They will get better together. And I think there's a lot that traditional capital markets, traditional exchanges can learn from the crypto ecosystem. So we're glad to be part of it. Glad we made the leap 3 years ago. And of course, like any exchange group, when there's volatility, things are moving around, you match more buyers and sellers, and 2021's been a good year for us.
Everyone's happy. No, and so I appreciate you saying that. And you touched upon where I was kind of taking the questions next, is that blocking and tackling about how you created this entity. So you talked about integrating with the 5 major chains, and maybe walk us through a few of those other pieces, the actual physical things or projects that you had to get done to launch the LMAX Digital. Like what were those steps?
So first and foremost, right, what does the product look like? The good news for me and for Chris is it's currency 1, currency 2, right? So, or if you like,
you're used to that.
Same as XAU USD, right? So
that's right.
Gold, oil, metals, foreign exchange. So that bit's easy. So will the exchange work for that? Yes. Who's making markets in this right now? Well, it turns out it's a lot of my existing practitioners. So 40% of my LMAX digital customers today trade foreign exchange with us. So that connectivity bit was easy. Yeah. Then something I know you're going to touch on is, okay, we like regulation. We like the rules of the game. You know, the MTF, for your US listeners or viewers, multi-island trading facility is like a swap execution facility, a SEF in the US. So we've had that license for well over a decade under the FCA, regulated brokers around the place. So we actually went to our home regulator, being the FCA, and said, hey, we're going to move into crypto, launch a new crypto exchange. What regulation do you have for us? And they kind of went, nothing, David. And I went to their Gilded Towers, so to speak, down in Canary Wharf, and we met 13 people, and they said, look, we just don't have a framework right now. So nothing to stop you doing it, but we haven't got a crypto framework today. It's not a financial instrument, so to speak. So we actually looked around, and we looked at, there's other good jurisdictions. We looked at Malta, we looked at Switzerland. We're not US domiciled, so we didn't really look there. And there's one on our doorstep called Gibraltar, and they actually have a very advanced DLT, distributed ledger technology framework. A lot of the guiding principles in that are similar to what the FCA have. They made us implement, for example, the fifth money laundering directive before we went live. So we went and got regulated there. And look, frankly, Travis, I'd say that a lot of my our trading partners didn't really care if we were regulated or not, because they were trading a lot of other unregulated venues, but we happen to think that's the future. So we went and got the regulation as a broker, as an exchange, as a custodian. So then at least there's a rule book that follows our rule book, and put that out there. So that's sort of the admin side of it. Staffing we already had done. And then the last bit was just the integration with the blockchain and understanding payments, right? Because I'm very lucky. I don't realize how lucky I was for a decade or 3 decades really in foreign exchange, right? We just match buyers and sellers, and then we send it down to the prime brokers or the clearers. Right. They take care of everything. And there's a big clearing bank at the end of the street called CLS, and they take care of that. Crypto, that doesn't exist. So effectively, we had to store our customers' assets. I couldn't put it in JP Morgan, Barclays, Bank of America bank accounts, just the way it was. So we had to build our own segregated wallet solutions, and they were cold and vault, and we can talk about that at a certain time, and understand multi-signing of that, so that I could settle with the like of Chris's company and other companies like that on a 7-day-a-week basis. So really the heavy lift for us was process and procedure rather than technology, because if the market's active, shall I say, I was going to use some other language there. If the market's active at a weekend, Chris is out of coin. He needs his coin, right? Or he needs his dollars. I need to settle that. Now, the traditional payment rails aren't there. So we have to do it ourselves. We have to visit vaults, send payments. And there are a couple of banks out there that will settle dollars, for example, on a Saturday or Sunday. So it was really that, getting your head around that 24/7, 7-day-a-week process setup, rather than what we do in traditional capital markets.
Got it. And so, Chris, maybe just talk about that a little bit. And, from David's point is, as the professional trader groups like Hehmeyer Nortide have come into this space, as more of these groups have come into that space, what pieces are you building? I mean, you've built these businesses before in the past. What pieces are you having to build now that you either didn't expect or you've had to kind of stitch together? So just talk about that a little bit.
Well, as David was describing it, the 24/7 leap is a big one, and not to be underestimated. It's a big thing. In the old days, when I was on the floors on Friday afternoon, they'd ring the bell, close the markets, close the banks, close the clearing houses, and we'd go have a few drinks, right? Now we're making market in we make markets in about 25, 28 coins on the centralized exchanges. And on Friday evening,
you're drinking Red Bulls to stay up longer.
Exactly. All of a sudden the things lighten up, right?
That's right.
Like Saturday morning in Asia, and people are getting on their phones and trading. So if you're going to be a market maker 24/7, you got to be ready. And 24/7 is like no kidding. It doesn't sleep. And David's exactly right. We get loaded up and hedged over at LMAX, and we got to get money from them to send someplace, or vice versa, and get it to LMAX. And so it moves around the clock. And so I agree that it's been more about the process than the technology in many ways. All this is about technology, but that's really a true observation, that a lot of this process is hard to put into place and takes time, effort, thought, and organization, and human organizational efforts. And so that's not to be underestimated. And so the whole development of this 24/7 market, I think, is just beginning. And the traditional exchanges, I think, have been a little reluctant, and it's a big leap. So building out, just as David was saying, building out our ability to move coins, to have coins, we believe in various custodians and exchanges where we can get to them and move them and have them be safe and in various solutions, MPC solutions, or cold or hot, or in movement, in transit, 24/7, is something that has taken us a while to build out.
And that was all on the ground experience, Chris. I mean, were you able to hire? This asset class is so young. The space is so young. Were you able to hire people from the space, or no? This is on the ground, figuring out, leveraging your experience and your team's experience for the past, so long.
A little bit of both. We had a young man that we hired who was really into the space and was really helpful to a boomer like me. But there were times where I had to say, no. That's not the way this thing works, right? And he'd go, oh, okay. So I'd explain sort of the traditional way it was and the traditional thinking and the reason why that was, counterparty risks or whatever, in the traditional world. And so I think he was a huge help for us in trying to walk through the jungle of crypto and helping us to navigate it. But it also helped a lot to have an understanding, and I think he learned a lot from us in understanding the traditional world.
Got it.
I'm just laughing to myself there, Chris. Don't tell anyone, in case they're listening, how much fun it is to have an opportunity to make markets. And if you're a simple exchange, get paid commission at the weekend. Shh. Don't tell the big guys, right? So
I'm sure no one's watching. It's the last panel. I'm sure no one's watching.
Some of the youngsters have to lose a weekend. The new weekend is a Monday, Tuesday. But hey, first time in our lives in capital markets that you get to be on the golf course, and people are trading on your matching engine or on your algorithms.
That's right. That's right.
Would call that opportunity,
that's right. So, David, we won't tell anyone. So, as this system, as you have players like yourselves and Chris come into the fold, and you're seeing anecdotal information coming from the news every day. People talked about the institutionalization of crypto, digital assets. Are we there yet? Give us your thought and kind of what data you're looking at to support that conclusion.
If you want to take me, Travis, I mean, look, pure and simple, I'll say to you, I'll say to Chris, I'll say to anyone watching, if the institutions weren't coming, LMAX Digital wouldn't exist. We did $75 billion of crypto volume in May. Now, it's purely institutions. The only exchange that traded more than us in Bitcoin, you may have heard of them, right? They had a big listing recently.
I wouldn't have any idea who you're talking about. Yeah.
They have 56 billion customers, right? So look, we have 500. And the truth is, it's probably 50 to 100 that would do 80% of that. So if the institutions aren't coming, we wouldn't be there. So in many ways, I think, we can be a barometer for the institutionalization of the asset class. It isn't there yet. That's why I'm so excited about the future of the product, the future of the asset class, and of course, being selfish, the future of LMAX Digital. Going back to my group again, I have 34 banks connected that trade on my FX exchanges. 3 years ago, I knocked on 34 doors and said, hey, any interest in making markets or even taking liquidity in my new exchange, LMAX Digital, most of them didn't answer the door. And if they did, they said, come back in a couple of years. Now, they're not there yet, but you see the press every week. There's another announcement from a new bank, right? Not telling any names, but I mean, I have 10 of those 34 banks taking my market data today. One fully onboarded, still waiting to trade, but fully onboarded. Another 3 to 4 in the pipeline. Now, that is the gateway to this asset class really booming. Why is that the gateway? That credit intermediation we talked about, right? The gateway to the asset class, providing market access, which is what capital markets is all about, really. Providing market access to real money, providing market access to pension funds, providing market access to corporate treasurers. That's what they're going to unlock, because at the moment it's still quite difficult.
So then what are those steps? So David, what are those kind of core pieces of unlocking actions? Regulatory, banking, we kind of talked about this before, but what are they?
There's a little bit of that, right? So external forces, external and internal forces, I guess if I'm one of those institutions. Externally, some of them, I know a couple of US banks are waiting for Fed approval to touch the physical. They can touch the future today. That's okay. So that's sort of something external they might be looking for. Internally, they're going to need risk committee approval, credit risk committee approval, the money laundering committee approval, right? To make sure that whoever they deal with, they understand what they're doing, because the last thing they want to do is go into it and then understand there's a fine down the line. But I think maybe the biggest driver actually, and you can ask some of them, is that the swathes of money from the private banks leaving on a daily basis because they want to access crypto. And you know where it's going, right? Because you now have, private investors can now trade on a listed, with a listed company. So they're losing. That income would normally sit with the bank. All of us would quite happily just sit with our bank and do everything there, right? If it's just managing your portfolio, we're not trading for a living. But if they don't offer the product, then they run the risk of losing a lot of their income going forward. So that's the biggest driver. So mostly it's approvals. And then I think the last bit, the last bit actually is the storage, right? So they're all blue chip names. They sit on a lot of customer assets. The customers need to know that their assets are safe with them. They assume their assets are safe if it's in dollars or euros. They need to know it's as safe if it's in Bitcoin or Ethereum. So that's the custodian solution. So look, the barriers, I always say about, you've said this, you've heard me say this before, it's the ABC of crypto: greater adoption, better banking, better credit intermediation. So that's what the blockage is in the plumbing at the moment. But I just sense that the plumbing rods are coming out and it's being pushed further down the channel, and we're not far away from that mass institutional adoption.
So that's helpful. So Chris, talking about the ABCs, and can I add regulatory certainty there, maybe another C. So when you were forming Hehmeyer Nortide and how you've looked at regulatory structure, do you feel like clear regulations are going to help firms participate in this more? How does this impact a business like yourselves when you were just forming it? How you're thinking about it today? What are you thinking about on the regulatory side and how this affects cryptos?
Well, it was notable when David said they went to Gibraltar because they had regulatory structure. And we are actually taking our U.S. prop trading company and splitting it into two companies. We're splitting it into a hedge fund and a market making company. And the hedge fund is moving to Bermuda, Warwick Capital Management. We've set up and are about to launch our hedge fund, which trades in traditional methods like a yield curve. They trade spot against the futures, against the funding rates. And they're moving to Bermuda, and the main trader, the chief investment officer, is moving with his wife to Bermuda. And then separately, we're moving the market making company to Zug, Switzerland. And we think that Zug Switzerland is the best place to run a 24/7 global market making company. And so those two activities, of course, are a little bit different. One's trying to search for alpha for its investors, and the other one's trying to be a service company and service clients. And so those two, going to Bermuda and going to Zug, I like to say, I've been asked, are you going to avoid regulation? No, we're going in search of regulation. Those are two of the better, and David knows this, two of the better regulatory infrastructures that there are on the planet. Gibraltar's one, Singapore's one, there are a couple of other good ones. But the point is that we're going in search of some certainty. The United States has some real challenges, and I don't relish the people that are going to have to make some of those decisions. We have a very well, thoroughly developed regulatory structure where we have a number of different agencies that have different opinions about securities, futures, and the way things need to be regulated. And this technology is disruptive, and it's going to become, I believe, particularly challenging when it comes to DeFi, because the whole DeFi space, and I saw that Commissioner Berkowitz yesterday gave a speech and said that the
illegal, I believe he might have thrown out the term illegal potentially.
I think it was the term he did use, that these derivatives traded in DeFi are illegal in the United States. And looking at the law, I think he's probably right. I'm not taking issue with him at all. I'm just saying, okay, in DeFi, who do you go after? The programmers or the customers?
I believe programmers have been called out potentially, Chris, as that's who they might go after.
And so I'm just saying it's a challenge as it goes forward. And some of these other venues are a little more agile. And so I think it's going to be a challenge, but going to Gibraltar in search of regulation, going to Switzerland, going to Bermuda, going to these venues where we have some certainty is almost a theme of the way the business is developing. That, in my opinion, the industry is thirsty for regulation. Maybe I'm curious if David agrees.
No, look, I think Chris, definitely we're on the same page. We like regulation. It sets the rules of the game. It sets the barriers high so that everyone can trust who they're dealing with. And one little point I just throw out there, Travis, is a lot of the regulation is to protect private individuals.
That's right.
And private investors. And that's basically the bedrock of our LMAX global FCA regulation, right? It's all about protecting those private investors, and we should do, right? So, for example, they banned leverage in the United Kingdom and across the MiFID EU zone, actually, on crypto. Quite right now, because it's so volatile. If companies like Hehmeyer want to trade on some intraday leverage, that's okay. They're big guys. They know what they're doing. They're not actually using extreme leverage. But there were some venues, some platforms out there that were allowing people to leverage 20 to 1, 100 to 1, which is kind of crazy. And it is the road to the poorhouse. So we must protect private investors. What we want is just a wholesale framework. And make no mistake, again, back to the market access point, if you have a wholesale framework that benefits the whole ecosystem all the way down to private investors. But I'm going to challenge one thing there, though, which is interesting. All these regulators can make all these comments and saying it's illegal, but what's their regulation for? If you're telling me we want to protect private investors, then I'm right behind you. Absolutely. In the United Kingdom, for example, on the MiFID suitability test, do you understand what this product is? Do you understand leverage? If not, it's not for you, for example. Have you traded it before? Okay, well, go off and do your training course and then come back, right? A bit like doing your Series 7, if you like, back in the United States. So if that's what it's about, okay. But what else are they trying to protect here? Is it they're trying to protect the way money is moved around the planet currently? Are they saying that's perfect? Are they trying to protect their fees? So I challenge that in DeFi. I think, we need to let DeFi breathe. Now, in my opinion, it's perfectly possible to regulate the participants and the on-ramps to a centralized exchange or decentralized. I believe that's possible. And again, if your concern is money laundering, that's also possible. Because at some stage, anything can happen out there in DeFi world, but at some stage, you want to bring it back into the real world, even if it is buying a cup of coffee with a Bitcoin. And that's where you follow AML. So sometimes I wonder what the historic regulation is for, right?
Yeah, and I think that's a valid set of questions that I'm sure we'll get more clarity. Hopefully we'll get more clarity as we go forward. And we got a question actually all around this topic about regulatory harmonization on a global basis, David, you talked about a framework, but Chris, do you see, you barely are able to get harmony across traditional asset classes that the rules have been, well understood for decades. Do you see some type of harmonization happening within the digital asset space anytime soon? Like, how does that even come about, if it could?
I could be surprised, but I don't see it. When you got one country that says, okay, it's a currency, and 5 countries in Europe can't agree on what's a security, I think it's very difficult for them. And maybe it starts at G7. Now, FAFT got together and put together this travel rule proposal and have put it out there. And a lot of people, jurisdictions have pushed back. And so that remains to be seen exactly how that's going to develop. The effort to try to coordinate all this is monumental. And so I don't see it happening. Now, maybe I'm going to be surprised and there's somebody's going to call for and then provide the leadership to get people together and try and establish some good standards. And in some of that context, I think that'd be a good thing for the industry, right? There's definitely some bad guys, and we all would like some rules surrounding that. As I say, we're thirsty for regulation and thirsty for some rules. But I think it's a real challenge because different cultures, different countries, different cultures have different approaches to these things. It's just fundamental about that. So I think the horse is out of the barn, and it's going to be very difficult to coordinate global regulation, I think.
Travis, Chris is absolutely right. But let's do it in bite-sized chunks. I mean, actually.
But David, let's talk about that for a minute. FX works pretty well, right? 5 trillion a day transacted across the globe. You've been in that space a long time. What are those analogs that maybe we could pull from that space that you know so well that would be applicable to what's happening here?
Well, actually, that's interesting because spot is not considered to be. Spot trades $2 trillion a day. And it's not a financial instrument, so there's no regulation around spot. But everyone who deals in it is regulated, right? So if you go to a bank, they're all regulated. But it's self-regulating. And actually, there's an issue right now in foreign exchange about we're trying to create a global FX code. It's been an issue actually for 4 years. But so I think we can learn from it. But bite-sized chunks. AML is global. FATF guideline. Ignore the travel rule for now. FATF guidelines, every country in the world, bar one, is signed up to FATF guidelines. And that's pretty simple, by the way. 9 pieces of paper, please, so you can open an account, proves your source of wealth, source of funds. That's it. You're a bona fide individual. You're not a criminal. You can trade. It's the same if you open an account with your lawyer or your accountant. So that is global. Now, Chris might be right. The travel rule looks a bit clunky. It'll be problematical to implement it, but it is possible. In Europe, MiFID showed that with new trade reporting rules on certain instruments. So it is possible. And actually, the whole nature of the blockchains is that you can track, if you like, your assets,
a lot,
money much easier than you can in fiat. So I think
it's the most ironic thing to me that you have this asset class created for, let's call it private transactions, that is probably the most transparent on the planet.
So genuinely, I think this is the issue. But people are saying regulation is an issue. Global regulation is never going to be harmonized, a bit like global tax. Sorry, I don't know what's happening with the G7. It's not going to happen because they also compete, right? But ultimately, the cream rises to the top, right? So Chris has been running around trying to find the best regulator for his new entity. Likewise, if you go back to traditional asset classes, yeah, it was the SEC, the CFTC, the FCA in the UK, ASIC in Australia, the MAS in Singapore. Apologies if I've missed anyone in Europe, BaFin, for example, right? So ultimately, this is where you'll end up, right? In the best regulated jurisdictions. But first and foremost, any country in the world can sign up to AML. That bit we can have global harmonization. Then I think you should let regulators and countries compete with regulation, but bona fide capital market centers, let them compete with their regulation, much the same way we let them compete with tax.
Chris, what's your agreed, disagree?
Generally, I agree with bite size because those are places where you can find some agreement. But if El Salvador says it's a currency, in the United States, it's specifically not a currency. It's a commodity. Bitcoin is a property, and the tax says it goes on your capital gains part of your tax return, and it's a property. It's a commodity. So okay, so where do you start with all of that? Different jurisdictions have different opinions as to what it is, but it's But I agree with the bite size. Like KYC AML is a good place to start, and the travel rule we'll see. But I'm just saying it's going to present it's technology that is the horse out of the barn, and they're not going to get the technology back in. They're not going to get that horse back in the barn. So they've got to come to grips with trying to cope with these things, and it will take real leadership to try to do it.
So, and that makes perfect sense to me. David, let's talk about, David added the digital asset class to his, platform that had traditional asset class on with FX. Chris, putting your exchange hat on, what are the traditional exchanges going to do? What is the response, do you think, to this coming flood of innovation on the blockchain and these products? Obviously, the CME has Bitcoin futures. Do these exchanges become does Coinbase buy a derivatives exchange because they're so big now? Like, where do you see these intersections happening, and how do the exchanges in the marketplace starts to respond?
Well, the CME has been they've been as an exchange that mostly caters to institutional customers and clients and customer base. The CME has done a good job of bringing these products to that institutional sector, right? And so people, big hedge funds, feel comfortable dealing on CME because they trust that it's regulated and they feel good about that. In my opinion, they've been a little slow on some of where the cohort is in crypto, which is the smaller guys, right? They got these minis, these micros, and they've exploded. But they don't have options on any of those things. And these other exchanges around the world, FTX and so on, there's a bunch of them, of course, are creating incredibly innovative products. But that's very cumbersome to bring to the United States as a contract market. And of course, that's why LMAX, in my opinion, has seen a lot of success, because they've been a little bit in the middle of that. They're catering to people like us, professionals that are making markets, to people that are bringing retail order flow. And then they are the sort of very good professional marketplace where I don't want to jinx them, but the technology's dependable. We can depend on moving money in it. And they've been institutional grade in the crypto space, which has been a huge help to service people like us in that. So I tend to think the U.S. players have been slow. I think they have the potential of being disrupted. I think the regulation in the U.S. has protected them some, and I think they've missed out. The Coinbase is just really a spot exchange, and so they're going to want to get into the derivatives in the United States. But there's some of these people are just saying, forget it. We'll forget the U.S.
Yeah.
Travis, I can't believe I thought we were friends. You nearly swore at me. You brought up the Chicago guys. So
I like to everyone. I wanted to give Chris an opportunity to say how good you guys were.
Soon as you brought them up, I'm going to say, look, they add nothing to the ecosystem. It's very simple. It's a 24/7, 365 market. What's the point in having a market that's open 5 days a week? It adds nothing to the marketplace. Genuinely nothing, right? It ticks a box that says we're in it. But I got to tell you, there's a hell of a lot of activity goes on at the weekend. Right. So unless any of these big names come to the party and operate 24/7, let people touch the physical coin, right? Not a make-believe, what's effectively dollar non-deliverable forward, right? And that adds nothing to the ecosystem, then unless you let people do that, I'm afraid you're not going to be in the game. And to your point, to some of the big retail guys out there, yeah, let's see where they go next. I think it's very exciting. There was a leader of a large American bank said, yeah, we should all be scared by what's happening because they have balance sheet, they have know-how, and guess what? They have a lot of customers. So where do they go? They can move into other asset classes, or they can move back in the value chain. So I think all of us, and that, from LMAX Group to perhaps the biggest swear words that you mentioned earlier, I think we need to be on our game because this is the future of capital markets. And a lot of what's happening, be it in DeFi or centralized exchanges today, but certainly what's happening in the crypto ecosystem will be the future of capital markets. So everyone needs to have an eye on it. Otherwise, and it's a big statement, otherwise they may not be in business a decade or 2 decades from now.
So David, let's talk about that, the future of capital markets. Obviously, that's a big, a big statement. And maybe, DeFi is, you have such strong believers in DeFi. Do you, in your heart, believe that institutions are going to be using DeFi to trade with each other? Or do you think that's still going to be more of a centralized infrastructure because either of safety measures or their investors want that level of safety? Like that to me, I struggle with thinking how DeFi is the future of capital markets. And tell me where I'm wrong.
Don't struggle. So 100% they're going to do that. Look, one step at a time, bite size again, and it takes the Hehmeyers of the world to move forward, right, to create those markets for institutions to engage in a familiar way, right? So that's going to be the first step. But make no mistake, within this next decade, those large institutions will be exchanging smart contracts. So struggling to get your head around, I understand some people talk about colored coins and tokenization. It's quite difficult to get your head around. Imagine this scenario. Every institution puts their balance sheet on a decentralized exchange, right? Every single institution has spare cash that isn't being utilized overnight today. But there's someone who's long a lot of Mexican pesos, back to my world, and there's someone that's long a lot of US dollars, short Mexican pesos. And it might be intraday, it might be for 8 hours, it might be over a settlement date. So imagine we put our balance sheets up and think about what's happening in DeFi world. Think about staking, right? More efficient use of your capital. This is DeFi. And I assure you, the largest institutions in the world will be using each other's balance sheets, as they do today, more efficiently on a real-time basis. I'm happy to say, I'm not going to announce it now, but we're actually contributing market data right now to what we think is going to be the leader in low latency market data to the DeFi world, right? So within a network which allows people to value their asset class, right? So we're going to be, as a centralized exchange, contributing to the DeFi world so that people can value their collateral. That's what's going to have to happen. When we utilize each other's balance sheets better, more efficiently, we need efficient valuation. You need an efficient oracle, right? And you need those that reliable low latency market data.
A central oracle. At least you have to have one piece of centralization.
Watch this space. I'll make an announcement in a week or two.
All right, I like that. So, Chris, talk about, and you're on mute, by the way. Just talk about how your Hehmeyer Nortide is utilizing DeFi today, if they are, or how you're thinking about going forward. How is it? Do you market making programs on Uniswap or SushiSwap, or you name your scenario? How are you using DeFi today? How do you think you're going to use it in 2 years from now, for instance?
We are not participating on the DeFi exchanges today, but we trade the DeFi coins on centralized exchanges. And it's fascinating what's going on there. I agree with David completely that the DeFi space is coming as sure as self-driving cars are coming. It is out there a little bit, and there are going to be crack-ups, and there are going to be some crashes, and things are going to go wrong, but it's coming, and it's coming in a big way, and it brings innovation and access to the financial markets, again, that we haven't ever seen before. It liberates interactions between people, and it's going to allow for all kinds of efficient markets. And we want to be very much a part of that. We think Zug, Switzerland is the place for us to do it. And we want to make sure we're doing that legally and on the up and up. We've avoided it from the US. Like I said, we trade about 30 coins on the centralized exchanges. And they do incredible things. A couple of weeks ago on Friday night, the thing lit up. We were trading a lot of mana. I'm like, what is mana? Mana is the currency that's used in Decentraland, right? This metaverse thing. It's Saturday morning in Asia, and people are on their phones trading it up, and we got to be making markets. And so that world is developing and developing fast, and we're waiting until we get safely into a jurisdiction where we think we can participate in a legal and up way.
That's very exciting. That's good. And so in your mind, the self-driving cars, I always think they're right around the corner, but they're, that corner keeps going out further and further. Is this the same thing as DeFi? Is it right around the corner and, you're asymptotically approaching zero all the time, or no, it's 10 years out or 5 years out? What's your crystal ball here?
Well, it's in place. People are using it. It's actively working. It's like self-driving cars. You see them driving around town, but it's not at scale yet. And so the concepts are pretty easy to extrapolate, sort of like the internet in the early 90s when it took a handshake, to use your modem to dial in. But you could see as soon as the pipes get bigger and the systems are able to process a lot more data, you can send all kinds of things through there. That's sort of like what it looks like. It's you can see the concepts and this ability to be able to provide these various smart contract products, and it's just not scale yet. It's still pretty small. It's mostly our industry, but you can see that it's going to get a lot bigger, in my opinion.
And so, David, is that a reflection that as we've been talking about, of the ABCC, that it gets bigger, or it's just going to get bigger because there's more institutional players in this because they feel comfortable? Like how is that going to get bigger in your mind?
Good question. Look, I think we have to step back a little bit. The white paper was written 13 years ago. It's come a long way. Bitcoin's come a long way, right? Ethereum, you can argue, may have come further. These are all scientific experiments, capital markets experiments. I don't quite know, when you had the first smart contract, but probably, I'm sure it was well over probably 5 to 10 years ago. So that's a scientific experiment. And I get told every day about a new blockchain that's better than the last one, and it's faster, and it's can handle more transactions. They're all actually a bit slow right now for low latency trading. So I think it's use cases. And funny enough, it will be us. I say that collectively. So Chris's group, my group, all the other institutions there that actually start to use it. So I talked about an interesting one yesterday where just exactly that. How can we efficiently use our balance sheet on a today basis? So in foreign exchange basis, you talk about Tom-neck swaps, and there's a lot of T+2 settlement. This is really inefficient for capital. Crypto is more efficient for that because I can settle Bitcoin and dollars with Chris on a Saturday, at a few hours notice if required. So if you imagine everyone, and that filters all the way down, Travis, because it is quite complicated. Like everyone else, on my phone, I've got a MetaMask or whatever it is, wallet, trying to get my head around it. There's a million coins. I only understand about 10 of them. It's quite complicated right now. But give people a use case, and everyone on the planet, whether they've got $10,000 in their account or $10 million in their account, making use of that, right? Everyone taking control of their own finances, which is what we've been asked to do over the last 20 years. Don't rely on government support anymore. Take control of your own finances. That's where DeFi will come into play. And I think it will start with the institutions, and we'll end up productizing it, making it easy, right? This is what you do with your pension. This is what you do with your overnight deposits. This is how you can make your property work for you. This is how you can make your equity portfolio work for you. Or guess what? This is how you can actually make your Bitcoin or Ethereum portfolio work for you? Because at the moment, they effectively stick it under their bed. But it's like, Chris and the guys out there are looking at this great contango in the market, and they're going, hold on a minute, is there a repo market out here, which means, I could put my strategies to work. So it's just going to become a more efficient economy, a more efficient world. So I think it's those use cases that will come first. But it's happening now, and people, smarter guys than me, are developing it right now.
And are we needing tools? We'll touch upon surveillance here towards the end here, but are we needing tools like, Chris? Do we need a crypto cat to help us from a regulatory standpoint, so that we can get all these prices and do transaction cost analysis, and we have a settlement price to work from? What, like, in your mind, are there kind of core pieces of either surveillance or infrastructure that are needed to take this overall marketplace to the next step?
I don't see something like that coming for the reasons we talked about earlier, that the jurisdictions all have different opinions about the asset, right? And whatever the asset is, Bitcoin, Ethereum, all smart things, it's stable coins, et cetera. So, and it's complicated. So I don't see something like that happening. It's a global 24/7 market. And so I think it's, it's young. It's a very young market. And so I think it's got a long way to go, but I don't think it's going to be a coordinated regulation.
David?
I think, my advice to everyone is trade with trusted brand, trusted technology, perhaps someone that's trusted with regulation in another asset class while it doesn't exist. It's funny, because I knew I was coming on this panel. I looked at, because I operate a regulated MTF within LMAX exchange, we have a rule book, and we have a rule book for the FX venues and for the MTF. And then we have a lot of technology rules within that. And we apply the same for LMAX Digital. So LMAX Digital also has its rule book. Now, there's no requirement for that in crypto, but we operate best of breed. And I just thought, I have to put my specs on, I apologize. But
let's have the quote. You're reading right from the rule book. Let's have it. This is exciting.
Things that are built into the rule book, right?
Yeah.
So venue controls we have in place. You have volatility bands, you have inversion protection, you have order throttling, you have order to trade ratios, you have pre-trade risk controls, working order limits, post-trade controls, you have kill switches, trade cancellation or re-rating policy, venue capacity. In terms of market surveillance, we do the same reporting that we do for the FCA regulated. You're looking at anything that looks like prearranged trading, you're looking at wash trading, you're looking at painting the tape, you're looking at spoofing, right? So this is what the bona fide operators are doing. And guess what, by the way, that's an anathema to a lot of the retail exchanges that have done really well. Hence why you see, the problems they have when the markets are volatile. So, we can't wait, Travis, we can't wait for regulation on that nirvana, global harmonization. It's not going to happen in my lifetime or my career in capital markets within crypto. But anybody that looks like LMAX Group, that looks like LMAX Digital, that looks like any company with Chris Hehmeyer's name on it, is going to use best of breed, right? Everything we've learned over the last 30 or 40 years. And yes, in the meantime, we might have to be self-regulating to a certain extent, but we will arrive at an efficient, orderly marketplace. So I think that's going to be the step. And for once maybe the regulators might actually talk to the creators, might talk to the venues, the operators, and say, hey, how do we get our head around this? I did it way back in the 90s. I was lucky. I worked for a company called Credit Suisse Financial Products, and they wrote equity derivative basket option regulation for the Bank of England because they didn't have it. They had this new product. They went and wrote it. So it can happen, but let's just get on and do it and follow what we know to be best of breed, work within the rules of the game we currently have. And I think the whole crypto ecosystem will rise with us.
Hear, hear. The wise words have never been spoken by two really champions of the industry. And this is why this is the best panel. Hopefully we've had thousands of people listening in to our experts and enjoying this content. So with that being said, I want to thank you both. Chris Hehmeyer, again, phenomenal talking to you. David Mercer, LMAX Group, really appreciate everyone's time. So thank you both for sharing your insights. Very bullish in the space. Obviously, you can hear us all very bullish in the space. I wanted to let everyone know before we sign off, conference organizers want me to remind everyone to attend the networking room. Just click on the gray bar on the main conference page that says join us there. So for the Crypto Connection, really appreciate everyone's time. Thank you again, David and Chris. Take care.
Thanks, Travis. Thanks, Chris.
Thank you.
Thanks so much.